Are you ready to embark on an exciting journey into the world of home loans? Whether you're a first-time buyer, looking to refinance your already existing bond, or you want to buy a second property, you have come to the right place. In today's video, we are diving deep into the world of understanding how home loans actually work, right? So get ready to gain invaluable insights to demystify the process and empower yourself with the knowledge you need to actually make the right decision into your financial future. So grab a cup of coffee, sit back, and let's explore the fascinating world of home loans together. But most importantly, don't forget to hit the subscribe button and ring the notification bell so that you never miss out on the latest tips and advice of anything in real estate. So let's get started. So the first thing to understand is what actually is a home loan, because this is the first thing that you actually need to understand. This is one of the most important thing into the process of buying homes. So a home loan, also known as a mortgage or a bond, is a type of a loan that is specifically designed to help individuals or families to purchase a home, right? It enables borrowers to secure a large sum of money from a lender, typically from a bank or financial institution of some sort, to cover the cost of the property. So in return, the borrower agrees to repay that loan amount plus interest of a specified period. Normally, it will be spanning several years, from 20 to 30 years. So now that you understand what a home loan is, you need to go deeper into understanding what are the type of home loans that exist, right? So the first one is called an introductory or a honeymoon rate home loan, right? So these loans offer a lower interest rate for initial period, usually the first year or two, right? After the introductory period, the interest rate typically reverts to a standard variable rate, right? So it's ideal for borrowers who want to take advantage of lower rates initially. And then the second type of a home loan is called a variable rate home loans, right? The interest rate on this loan fluctuates with the market conditions. So borrowers benefit from the potential rate decreases, but should be prepared for increases as well. So flexibility to make extra payments without penalties, right? So what it means is that normally most people are on the variable interest rate home loan, right? Where you have the repo rate and the prime lending rate. So what happens is that the market works in cycles. When it works in cycles, it means at some point the interest rate will go up and will go down. So when it goes down, when it goes up, right? So is your interest rate. Your interest rate will just follow what happens on the market. So this is what it means by a variable rate home loan, right? Then you have the third one, which is the fixed rate home loans, right? So the interest rate remains fixed for a specified period, usually is from 1 to 5 years. It provides stability and predictability in terms of the requirements, the repayments. It is not affected by the changes in the interest rate during the fixed term, right? But after the fixed term, you either need to decide to actually refix it again or convert it into a variable interest rate, right? Where you will be affected by the changes in the market conditions, right? So the next type of a home loan is called a split loans. So it's a combination of a fixed and a variable interest rate. So borrowers can split their loan into portions with different interest rate structures, right? So for example, part of the loan will be fixed and the rest can be variable, right? So it offers a balance between stability and flexibility. So that's what you need to understand with a split loans, right? Remember, it's a combination of a fixed and a variable rate, right? So, and then you have the last one, which is not actually the least. It's called the interest only home loans. So interest only home loans. So what happens here? So borrowers pay only the interest component for agreed upon period. Often it will be 1 to 5 years. So the principal amount in this case is deferred. What does it mean by deferred? It means it's put off or it's postponed, which means that whatever you are paying is within that period, which is usually between 1 to 5 years, you are only paying the interest and you are not paying anything towards the principal. Right? So this is normally useful for investors or those with regular income who want lower initial repayments, right? So these are the options that you have in terms of the home loans. I hope you clearly understand what is a home loan so far and what are the types of home loans. So we are really discussing things that are actually really important to understand in the process of a home loan. So far, you understand what a home loan is. And then you understand what are the types of home loans, right? So I don't want to make this video too long. So I'm going to break it into another session. So the next session will be focusing on what is interest rates and how do they actually affect your payments.